Okay, my name is John Weber. I am an associate broker with Charter One Realty here in Hilton Head, Bluffton area of South Carolina. And a little bit of a backstory here. I was at a Board of Realtors meeting a couple of years ago, and Don Davis was standing there giving a presentation about reverse mortgages. So I'm sitting there going, hey, that's our client. That's perfect. That's a perfect product for our client. So here I am 2 years later, and I'd like to introduce Don Davis and Jim Davidson, both with Mutual of Omaha. I have no affiliation with these guys, but it's part of a service I provide, introducing people to lenders, all kinds of lenders. But this is about really a reverse mortgage, how you can buy property down here. And a lot of people don't know anything about this. So at this point, I'm going to turn it over to you guys. You do your thing. And I think we'll have a lot of people watching this and very interested in this. And I will say at the very end of this video, I'm going to play a 3-minute short video from Mutual of Omaha that summarizes this entire process, which I think you'll find very interesting. So, okay, guys, it's all yours.
Okay. Well, I'll start out. I did meet John a couple of years ago at a seminar that I gave. We give educational seminars and continuing education seminars to realtors on a product called a home equity conversion mortgage, which is more commonly referred to as a reverse mortgage. And at that seminar, I talked about the many uses of the product. One of the uses of the product is using the home equity conversion mortgage for purchase. And that's really what we want to talk about today, because this is a product that's a government insured product. It's been around forever. People talk about Social Security as being a government program. People talk about Medicare as being a government program. This is also a government program. It's an FHA insured program. And it's an excellent opportunity to look at buying a house using significantly less money than you would normally use to buy the house. Jim and I are in the area here in Bluffton, South Carolina. We spend a lot of time working with realtors, giving seminars, lunch and learns, working with clients, working for people who are buying houses, moving in, helping them to understand this product and how it can benefit them. I'll give you a quick example. I had a realtor call me a year or so ago, and he said, Don, I've got someone coming down from Chicago. He's got $250,000 in cash. He wants to buy a house for $250,000 with cash, and he wants to never have a mortgage payment. He's going to live next to his parents, next to his children and grandchildren. But I've shown him many houses for $250,000, and he cannot find one he likes. So I asked him, Jim, what would you do if I told you you could buy a $475,000 house for $250,000 and still not have a mortgage payment? Well, Jim thought he was crazy. So to make a long story short, we met the next morning. We spent 15, 20 minutes talking about the basics, answering all the questions, explaining it in detail. What he ended up doing was he bought a $462,000 house. He put down $200,000. He pocketed $50,000 that he was going to put down, but he purchased a $462,000 house using $200,000 in cash and has no mortgage payment. That's kind of basically the way the product works. The balance, it comes from the loan, the government insured loan that I was talking about. So there are many, many examples that we run into of people downsizing, upsizing, right-sizing, whatever they want to do, renovations, all kind of examples that we're involved in helping people understand this product. And
so is there collateral on the loan?
The house is the collateral on the loan.
Oh, the one they're buying.
Yeah, right.
Yeah.
So it's a mortgage. It's just a mortgage. It's like any other mortgage. It's just a unique mortgage. It's a government insured mortgage.
Part of HUD, they've got to go applied with HUD, right?
Well, they have to fill out an application. We gather information from them. You've got to be 62 years old. It's got to be your primary residence. We make sure they qualify in those areas. And then it's a matter of submitting an application, just like submitting an application for any other loan.
Now, I know Jim's at the 18th Tee in Harbortown, which is a nice picture.
There he is, tee it up. See,
You don't want him-
That's the example at Belfair, right?
Vin Scully is to my right, so
Yeah, that's right.
I'll put Vin on in just a second. I appreciate it, John. I really do. And Don covered the waterfront pretty well there. But the thing about what we do is you don't see these products advertised. You don't see, banks don't offer them, right? Quicken Loans won't send you emails telling you about them. Rocket Mortgage is not going to pound you. These are niche-oriented products. Our demographic down here, of course, are retired folks or people that are nearing retirement that have spent their life building equity in a home somewhere else and are coming to the Lowcountry to retire, and they're looking for their dream home, right? And of course, today, as John has probably told everybody, we're in a very inventory constrained market. There's just not a lot out there to choose from, and things that do come on the market are snapped up very quickly, right? And so my thinking was, in looking at what we can do, and it's essentially, if you've got $1 to spend on a home in the Lowcountry, we can show you a way to make that dollar buy $2 worth of house. It's 50 cents on the dollar is basically the proposition. And as Don was saying, the application process is basically the same as you'd see from any other type mortgage, but it just opens up a whole, a bigger and wider swath of homes that you can look at, because the price points can be expanded significantly.
Is that going to get the buyer further in debt, and he's going to be uncomfortable and have to make big payments and all of that?
Well, no, it's a good question, John. And really, this, again, we're talking about a demographic that's 62 years old and older, right? Unless you're that age, you don't qualify for them. And that's what they're intended for. So when you consider that demographic and the fact that most of them have reached retirement years, just like Don said, we call it the third leg in a three-legged stool of government-sponsored retirement, with Medicare being one leg, Social Security being another, and the home equity conversion mortgage being the third leg of the government-sponsored retirement. If you think about it that way, that's what it's intended to do. No, the down payment, or the one-time payment that a client will make, and let's take $500,000 as the purchase price of the house as an example. Somebody 65 years old can pay $250 one time, right? The mortgage will cover the other $250, and as long as that's their primary residence, they pay their property taxes and insurance and any HOA fees that may be applicable to that. And of course, we get a lot of places down here where HOA fees are prevalent. Then they can live there for the rest of their life and not make a mortgage payment, right? The time the loan is paid off is when the last surviving homeowner or borrower departs the property, either by way of, if they want to leave the area and sell it, they can sell it, pay the loan off at that time. Or, of course, if they pass away, then the home is sold at the time that they pass away and leave. But the fact that you can get in for so much cheaper, and the fact that you can avoid monthly mortgage payments, is the big thing that these things offer folks in our demographic down here today.
Yeah, so Jim, let me just add one thing to that, Jim. The beauty of it is you never have to make a payment the rest of your life. There's no balloon. You never have to make a payment. But the beauty of it is you can, with no penalty, make a payment anytime you want to, should you choose to do it. Some people do that. Some people make an occasional payment to keep the interest rates down, and they feel more comfortable in making a payment, even though they don't have to. Most of the people do not do that. But it's important to know that you can make a mortgage payment if you want to, with no penalty, at any time at your convenience.
So what's the catch?
There is no catch.
No, I don't know. I've done hundreds of these things down here. The catch, really, from my perspective, is just education. There's a lot of skepticism we know about this product. There's a lot of misunderstandings about this product. That's why we give presentations to realtors. That's why we give presentations to financial planners and CPAs, because the majority of the people, including financial planners and CPAs, have no idea what this product's really about. They think they do, but they really don't, because there have been so many changes in the last 3 or 4 years. I've been involved in this for about 7 years, dramatic changes. So the catch is education. understanding the product so you then can determine objectively if you can benefit from the use of this product. And many buyers can, and many realtors can. The example I used earlier about my friend Jim and the Cedric, not only was the buyer ecstatic that he was buying a $462,000 house for $200,000 and pocketing $50,000. He was ecstatic about that, but also the realtor was, because the realtor sold a $462,000 house rather than a $250,000 house.
Well, I take a lot of people around, and let's just use the same example, 250,000 with a limited inventory. They're not seeing what they like.
Well, that's right.
That's
If
right.
the price is going up the way they're going up and the limited inventory, that's a great point.
Yeah.
That's
right.
300,000. Oh, go ahead.
Yeah. I was going to toss in. I just did one 2 months ago in Latitude, as an example, where a customer took essentially 52% of a $448,000 decision, 52%, put that into to close the loan, and took the rest in a home equity conversion mortgage. Took the money that he had left over from the sale of his house in Old Bluffton, right? And actually contracted to do his, the guys at Latitude probably don't like hearing this, but he contracted to do his own upgrades and a lot of his own finishes after they actually closed the loan. He did that for one simple reason. Latitude was in such high demand that if he waited any longer, the home would have been sold out from under him.
Right.
So he had to make a quick decision in Latitude, take the spec house. It wasn't finished the way he wanted it, but if he didn't close it that day or make that decision to contract for it that day, it would be gone in the next day.
That's
so
true.
he made the decision and just said, look, it's gonna cost us a little time. We'll do our own finishes and upgrades and go ahead and get in. Right. And
What
so
about the application process? Is that long?
not at all.
Okay.
No, not at all. We send clients a couple of one-page documents. We ask them for some information that we can use to put them into our system. It lets them know exactly what they qualify for in terms of the dollars and cents, right? That gives them an idea of what they need to prepare for to go when we actually send them an application. We do applications either manually on paper, or we can send them to them with DocuSign. Most people are going the DocuSign route this day and time, because it speeds things along so quickly. So we send them the DocuSign application, they go through it, they send it back to us. We send it right into processing. If there's anything missing in the application, we'll let them know. They can provide it to us at that time, right? And then it goes to underwriting. And literally, John, I mean, with Mutual of Omaha, the resources we've got in the back offices, we can close one of these things in 30 days, right? And so we're at a place now where we can close a reverse or a HECM for purchase as quickly as a forward mortgage lender can close a traditional mortgage.
So are they approaching you just to get a mortgage, and you're offering this as an alternative?
Both ways.
Okay, and they don't know of it, so you're offering it, right?
That's right. That's right. The folks in Latitude, for example, they had to get out of their house in Old Bluffton. They sold it, and it sold in 2 days, and they were homeless. Right. And so so the close of the old house and the coordination of the close of the new house, and of course, moving their belongings out to Latitude, all of that had to be coordinated in a very tight and compressed timetable.
Right.
Right. And so they paid cash, what they had out of the closing of the old house in Bluffton, paid that cash and closed the deal, and then came back to me and said, let me do a refinance on what I've just closed and paid cash for at Latitude, right? And so he took his equity back out of the ground at Latitude and did his finishes with what he did. The same thing could have been accomplished had he come to me in advance, like with you. If you've got a customer that wants to buy a house and it's $500,000, again, $250 from the sale of the old house or from savings gets them to closing, and we provide the rest in the mortgage.
Okay, all right. So you can do renovations also, right?
Right. It's an interesting twist on what we're doing today, because again, there's listings down here that may or may not be at a place where somebody would feel comfortable making an offer on them. They need cabinets, they need paint, they need flooring, there's a lot of things that need to be done to a house that may be 20 years old. I bought a house in Rose Hill Plantation that's 20 years old, and we're doing renovation in here. So I took a reverse mortgage on my property, of course, freed up equity that I had invested from the acquisition of the house, and I'm using those dollars to renovate our master bathroom, right? To put new flooring down in the house. We're going to do some work in the kitchen. If we got anything left over, we'll do some work in the great room, right? Okay. But essentially, that's kind of my strategy on an older home, is to take, go ahead and make a decision. If you've got somebody that's interested and is willing to go through the process of doing a renovation, right? It takes a little extra time, but folks like to do that. Some people like to do that.
So Don, are you doing the reverse mortgages? Are you doing a lot of them with increased value, like the example you gave for $462,000, or is it pretty much just the price, that their price range you're looking at?
I see it happen both ways. There are a lot of people that once they get involved in it and understand how it works, they end up buying a house that's larger, or not larger, but more expensive than they were looking. They like the fact that they're looking, for example, at a $400,000 house might not be what they want for $400,000. They like the fact they can buy a $500,000 house, get everything they like, and only put down $250,000. So a lot of people, particularly with the prices nowadays going up and the availability, a lot of people use it, to purchase a house up front.
Right. Okay.
But in Jim's case, it's important to not get too confusing here. The product can be used to purchase a house, and the product can be used to refinance a house that someone has and pull out money. That's what Jim did at his house. Right. That's what a lot of people do. But they're essentially the same product, but two very different applications of the use of that product. Okay. If that makes sense.
I mean, Don, you're pretty much, this is all you do, right? Reverse mortgage.
This is all I do. Yeah, I was retired down here, and my sister called me. She's 10 years older than I am. She called me about 7 years ago and asked me to help her evaluate a reverse mortgage. I did that reluctantly. In all honesty, I'd never heard anything good about them. And that's what I told her. So I said, let me roll up my sleeves and see where I come out. And I came out recommending that she do it. And that's when I decided that this was an unbelievably great product that's just misunderstood. And I exclusively do reverse mortgages and have done that for about 7 years. Jim's exclusively doing reverse mortgages too.
Okay. And I mean, you guys just didn't meet yesterday.
No.
Right?
No, we met in 1979, I think it was, Jim. I was in Atlanta, Georgia, and Jim was looking for work, and we were hiring. So we hooked up in 1979. I'm not going to say how old I was at that time, because that would tell everyone how old I am today, and that's old. But yeah, we've known each other a long time.
Okay.
Yeah. 40. I grew up in this part of the country and went to Georgia Southern College, which is just up the road in Statesboro, Georgia. And so my father moved to Hilton Head in 1970. And so Hilton Head's been a part of my DNA since I was a child. And so I love the area. I call myself a ping pong resident. I've bounced in and out of here a couple of times over the course of my life, but we came back a few years ago, and we're here to stay. And so Don offered me the opportunity to throw in with him, and I thought, well, shoot, why not? And just as he's done, the more I've learned about this product and the more application that I see for people that are coming here to retire and want to minimize the amount that it cost them to get here, I thought, this is just a great fit for what we're doing. And Mutual of Omaha is the largest lender for reverse mortgages for purchase. We do more of that kind of business than any other lender in the business. And so that's all we do. Yeah.
Okay. And I need to plug your singing and your songwriting. I need to get a little plug there. Jim has been here a long time. He's a great singer. You will see him at Harbortown in the summer sometimes. He has written great songs. You can buy them on iTunes. What's two of your big songs?
Well, and I've spent my life with a guitar over my shoulder. When I wasn't when I wasn't selling computer hardware for Don Davis, I was on the decks in the bars here in Hilton Head Island, singing to the drunks and the tourists. And I've done it for 44 years, on and off over the course of my life. And so when I came back as a retired guy, I decided I would sit down with my creative side and write some music about the Lowcountry. And so I've written a lot of albums. I mean, I've got 2 records on two CDs that you can find on iTunes, or you can find it on Amazon or Spotify, wherever you get music. And the name of my CDs are Bluffton State of Mind, which is the title song to the second album that I did. I did both of my records in Nashville. And the song is about Bluffton, of course. I mean, the city says the catchphrase is, "We're in a Bluffton state of mind."
That's cool.
So that's the name of the song of the second record. On the first album, I did several songs that are catchy. One called "Life on the Bluff," which is about Palmetto Bluff.
Nice.
There's a song called Ed's Oldfield Song, which is about Oldfield Plantation. I've got a song on one of the records called Harbor Town, which is right here where I'm located. Right. And so there's a lot of music out there. I tried to focus it on the lifestyle that we have here in the Lowcountry.
That's
and
great.
tell stories about it. Yeah.
Okay. Now, because we're going to wrap this up, how can people contact you all? Do you want to give contact information, or because somebody may see this video down the road, but how would you like to do that so people can contact you?
Yeah, Don, we've got phone and email, of course, and websites.
Yeah, well, we can, I guess, give our telephone numbers and email addresses real quick. My telephone number is 843-368-5535. And my email address is dond@mutualmortgage.com.
Yep.
Okay.
Yeah. My phone number is 843-816-0858. And my email is jdavidson, just DAVIDSON, like Harley Davidson. So jdavidson@mutualmortgage.com. And of course, John, you can drop these contacts down in the links below the video.
I'll put a link to the website and various information. And what I'm going to do now, I mean, thank both of you for doing this. I think it's great. I think it's a great product. It will help a lot of people out. It's like you said, basically it's education. People are selling their home up north, and this is going to be a new beginning for people, and they want to do the right thing. So I think it's another option for people. So I'm going to share this screen right now with this 3-minute video. And after that's over, this will end, but I just wanted to thank both of you, and come down and see the guys at Mutual of Omaha, and Jim will be down there strumming a guitar, I'm sure. All right.
He will be.
Yeah. All right. So here we
Thank
go.
you, John.
I'm going to start sharing this. And all right.
Tom and Sarah are nearing retirement, and the house they've lived in for the past 35 years no longer fits their lifestyle plan. Although they love living in a home that's paid for, they know that maintaining an aging home will be challenging, not to mention the burden of navigating stairs. So recently, they decided to look into purchasing a new home. The problem is, they haven't been home shopping for over 30 years, and taking out a mortgage while on a fixed income in retirement concerns them. Tom and Sarah know that paying cash for their next home is probably the best purchase strategy, but aren't sure they can get the home they really want using only the proceeds from the sale of their existing home. They don't want to tap into their retirement accounts either, because they fear running out of money at some point in the future. Tom and Sarah purchased their current home in 1977 for $57,900, and now they own their home free and clear. A trusted realtor in the area told them that their house is valued at approximately $486,000. After closing costs and realtor fees, they'll net about $448,000 when they sell their home. So, with a budget of $448,000, Tom and Sarah begin the search for their dream home. Tom and Sarah don't always agree on everything, but one thing they do agree on is this. This may be the last home they purchase, and they wanted to have things like single-story living, modern design, an upgraded kitchen, outdoor living space, and low maintenance. So, on a sunny Saturday morning, Tom and Sarah map out 3 homes they want to visit. After touring the first home, Sarah asked the sales agent, "How much does this home cost?" "$700,000, ma'am," exclaims the friendly agent. "That's a whopping $252,000 over Tom and Sarah's budget." Their dreams quickly turned to disappointment. The friendly sales agent mentioned that there's a unique loan program that they should really consider because it was designed just for them. He went on to explain a strategy that middle-income and affluent boomers like Tom and Sarah have been using since 2009 to purchase their dream home. He told them about the Home Equity Conversion Mortgage for Purchasing Program, or H4P program for short. What makes this program unique is that it only requires a one-time payment of about 50% of the price of the home, and then there are no monthly mortgage payments for the rest of your life. You remain responsible for home maintenance and the payment of property taxes, home insurance, and any HOA fees. Tom and Sarah realized they actually can afford the $700,000 home on this program, and that they are effectively doubling their purchasing power compared to paying cash or taking out a regular mortgage. The new H4P program is for those ages 62 and up. It's an FHA insured program that simply requires a one-time down payment of about 50% of the purchase price and does not require a mortgage payment as long as you live in the home. Remember that home maintenance and payment of property taxes and insurance are ongoing program requirements. Discover how you can buy the home you really want without tying up a large portion of your savings. Take the next step and learn more. Contact us today to learn why we're the nation's largest H4P lender, with loan specialists in 48 states.
Okay, thanks, guys. Have a great day.
Thank you, John.
Appreciate it.
Take care.
South Carolina, the summer sun is a shining, yeah. There ain't no place on earth I'd ever rather want to be. Oh yeah, well them low country spirits, you wind them up and you let them rip. Sweet oyster roast with friends, we're gonna stay here all night long. Oh yeah, we're in a Bluffton state of mind. Folks here are happy all the time. And from the promenade down to Brighton Beach, out on the River May, there blows a gentle breeze. So sit back and say, welcome to the Bluffton state of mind. Sandbars on Sunday, real bad sunburn on Monday, yeah. It won't keep me away. We're fishing cobia today at noon. Oh yeah. Well, Captain Woody's platters and Bluffton barbecue's fat bastard, yeah. You'll always find it there. Ain't nothing to compare with our good old boys and girls and this Bluffton state of mind. Folks here are happy all the time. And from the promenade down to Brighton Beach, out on the River May, there blows a gentle breeze. So sit back and say, welcome to the Bluffton state of mind. They're putting on tuxedos with a new attitude. From Belfair out to Hampton Hall and all along Baltimore, even in Sun City too. Grandma's got her hula hoop. She's in a Bluffton state of mind. Now folks here are happy all the time. And from the promenade down to Brighton Beach, out on the River May, there blows promenade down to Brighton Beach. Out on the River May, there blows a gentle breeze. So sit back and sing, welcome to the Bluffton State of